talk about imbalance gaps and why they will actually make you profitable. So let's dive right on into it. So I'm currently gonna get my face on the screen here. I'm just sorry, it's just taking 5 fucking years to load. You guys see all my fucking photos and shit. Alright, there we go. Alright guys, so let's get right into it. So the first thing I want to go over with you guys is firstly how imbalance gaps are actually created and why I trade them. So you can look at imbalance gaps as a form of supply and demand. Imbalance gaps actually occur when there is aggressive buying or selling pressure, like it says here, due to institutional traders, smart money. And actually smart money, that term, when people are tossing it around, when what smart money, who smart money actually is, they are the banks and institutions, specifically in the forex market, or if you're talking about other markets like futures and other things, they are the large players. So the people that have the most volume, since volume in itself actually controls the forex market, because whoever has the most capital, whether if it's a person, institution, economic wise, inevitably has control over the market, because they actually make decisions that affect financial responses that affect the market. So so smart money, what we're talking about when we talk about smart money, we're talking about the banks and institutions in the forex category. And also in the futures, you can just look at it as a large player, so also people too, because there's certain people, like for example, you trade gold, there's people that institutions trade gold, so the smart money also trades gold, and certain people have a lot of gold, so what they do on a microeconomic level can affect gold. So so you will actually know, the way you can actually see the footprints in the market when smart money is in the market is when they actually leave significant volume. Like if there's a forex news event, and this is why I tell you guys I trade news. Whenever there's a forex news event that's volatile, medium wise, or high volatile wise, there will actually be a significant increase in volume in the market, and that insignificant increase in volume would actually cause demand um, or supply. So if the news is bearish, that volume, that significant volume, caused that demand zone. And so usually when there is a significant up move or down move, there usually is a retracement or a pullback that you can actually enter off of, and that's what I basically do. So for you guys, let's get right into. I'm sorry, I was just over talking. So yeah, so imbalance gaps are created. And these are also known as fair value gaps if you trade smart money concepts, ICT. But yeah, so they are usually due to institutional traders or smart money traders, and they usually result in, like I said, a strong impulse move, either going in one or other direction. So an impulse move going up or impulse move going straight down. So like for example, on here, you see those impulses. Let's just clear up the charts and make it clean so you guys can understand exactly what I am talking about. So you see exactly where my gray boxes on the screen here are. Those gray boxes, do you notice how those blue candles that I have those boxes on that drawn out, do you notice how they are actually bigger than the other candles? And so these represent impulses. So when there's activity in the market, there is sorry guys, there are impulses. There are impulses that are being created because the market's actually moving because of that activity. And therefore, like I said, you can actually trade these impulses through a correction or a retracement back down to these areas to balance out the market. And the reason it needs to balance out the market is so it can create a healthy price action. Because unhealthy price action or inefficient price action usually looks like this. So if there's like bearish news and the market was like going like this and moving like this and stuff like that, then the market's going to go in a dramatic, unhealthy way downwards, like straight down. And usually a healthy market is down, up, down, up, down. But since we had volatility, the market actually moved significantly. And you can actually view volatility as activity. So when it's like when you're playing a game on Xbox or PS4 or whatever you guys view. I know I say this in other videos. When you guys have activity in the market, there's opportunity. Yeah, I just keep going. So yeah, volume creates volume sorry, volatility creates activity and activity creates opportunity. So write that down. Volatility, I'm going to write down. Volatility creates activity. Activity creates, I literally fucking forgot. Fuck. Opportunity. Fuck, there it is. Sorry for overreacting. Yeah, so volatility creates activity. Activity create. Sorry, fuck. I wanted to put it right here. All right, volatility creates activity, and activity creates opportunity. So if you look at under my face where the video is, you see the bigger picture that I drew with that gray marker shit, that squiggly shit. The big one is caused by volatility, therefore creating activity, and that activity caused the market to move. And you see the little tiny movement, the picture next to it on the right. There was no activity, so the market barely moved. So if we're smart money traders and we're supply and demand traders, ICT traders, or whatever, blah blah blah, you want activity to become profitable. So, we need, like I said, we need activity. So in order for me, the way I monitor activity in the market so I can actually know what to trade and when to trade is by forex sessions, forex news, and those two things help me determine when to be in the market and what's happening in the market. And yeah, guys, I know I can go more in depth here, but I kind of have to wrap up this video because I have another video to make. But I hope you guys had a lot of value. I have a free Discord. It's 100% free. I don't have a course. I do have an ebook that's paid, and I also have a one-on-one coaching. I don't do courses. I do one-on-one. So if you want to learn my specific approach and you just like the way I teach and my methodology, then just get my coaching. And if you don't want my coaching, you don't have to, no one's forcing you to get it. There's a whole YouTube channel I have 700 videos that you guys can watch, plus I have a 49-page ebook that you guys can download, and it's probably right here on the screen. But yeah, guys, I hope you guys found value out of this, and I really care about your trading journey. So if you guys don't give up on trading, guys, if you need help, message me. We'll help you. Join the free group chat. There's plenty of positive people in there. And yeah, guys, have a good week. It's Wednesday. I'm going to make another video later. Peace.